If you're doing any type of staking, you're going to want to pay attention to today's update. There's some major news coming from the SEC. Also, one of the biggest names in crypto just made a surprising comeback, and they want to reward you for their new features. Also, a real-world blockchain use case that's happening right now on Avalanche, and some fresh raises that are hinting where the big money's headed next. As always, I'm joined by Mike. Together we are Mick and Mike. How's it going?
Good, man. How are you? How's the weekend?
Weekend's good. Recovering from Vegas. I was out there talking to people that are, of course, bullish on Bitcoin, but it's just so interesting to see such a diverse group of individuals because you've got the Maxis that are in it for the libertarian reasons, and then you also have the Bitcoin, I would say not so Maxis that are
Yeah.
more in it for like the DeFi aspect. So it's just interesting to see such a wide range of individuals that are all big fans of Bitcoin. Kind of goes to show you how far we've come along.
Yeah, that's one of the, we invest in the Bitcoin ecosystem. That's one of our sub theses at Deep Ventures. And I think that's one of the most interesting aspects of that ecosystem is where you just have this just spectrum of cultures. Like you mentioned, you've got the maxis who a lot of times are just not going to support L2s or whatnot. They're going to only look at the things that are built directly on the Bitcoin L1, and then they're not going to degen into a lot of these newfangled things being built. And then you've got the other spectrum where they're just building crazy stuff, and you gotta have to think about who your target market is when you're building these things. You always have to, but it's particularly unique in the Bitcoin ecosystem.
And there are some people that they just don't want to hear anything outside of Bitcoin. And
That's
then
right.
there are some maxis that are saying, look, I get it, because if Bitcoin is a store of value, you need to have that peer-to-peer payment solution. And some people are saying that the Lightning Network is the solution. But then there are others that are recognizing Tron. Some are saying, look, we need another solution because Tron isn't necessarily the best one, although on-chain data will show you that there's a lot of stablecoin volume. But some people don't want anything to do with Justin Sun just due to his
Yeah.
track record. So there's that aspect of it as well. And Mike,
Yeah.
you and I covered Plasma before, and I think this conference really shows the real use case for why we need something like Plasma.
Yeah. Yeah. Plasma was very interesting, right? That was the one that was the USDT specific chain, but is built on Bitcoin, right?
Yep, absolutely.
Okay.
So there
Interesting.
are some people that are praising it, but we'll see. We'll see what unfolds. But regardless, it was a great conference. It was in Vegas, so that was always a challenge to
Yeah.
go out there and make that trip. But overall, Mike, May was a pretty good month for crypto, especially Bitcoin. And this whole thesis of sell in May, go away, well, either that's coming in June or we're just, not going to have it at all this year.
Let's hope it doesn't. But yeah, let's keep going up only, right?
Up only from here. But in the meantime, let's talk about some of the news that are happening right now in the market. And let's start with this SEC news that's coming out. And this is going to maybe surprise a lot of us. They're saying that crypto staking is not subject to securities laws. What can you tell us about this story, Mike?
Everyone knew that this was eventually going to happen. The SEC's approach to staking, what in past administrations, was just devoid of logic, right? So anyway, the SEC clarified that self-staking, delegated staking, and custodial staking do not constitute the offer or sale of securities under federal law. They emphasize that staking rewards are earned by following the protocol's rules and are not derived from the managerial efforts of others, which was that leg of the Howey test that is under debate. Crypto is such a new type of technology and asset that was being governed under essentially securities laws from like the 1930s. And a lot of companies that were legitimately operating, like Coinbase had a staking program, and SEC had them shut it down. Kraken had a staking program, SEC had it shut down, and just every blockchain has staking to secure the network, right? And it just, it was just everyone knew, everyone in the industry knew that this day would come where the SEC will say staking does not violate securities laws. It's just about time that has happened. But this guidance does not cover liquid staking and restaking at the moment because these protocols they kind of have a little bit more control over the staking decisions than the actual L1 blockchains where you stake. So still some work to be done there, but I just think everyone in the industry from the very beginning when the SEC was going after these protocols for staking and saying that they're securities, everyone just rolled their eyes because they just knew that they were treating this newer asset with just antiquated laws.
It's a natural progression, right? That development is going to outpace security, it's going to outpace regulation. Not to say that we're going to get all systems go on the liquid staking and the restaking down the road, but who knows? We'll see. I think that it's still fairly new. And I think that there's just more to be, to your point, more to be unraveled on that end. But OpenSea, which is a very kind of like a blue chip name in the space. If you've been in the industry long enough, you know that they've been around for a while. And
Of course.
originally, they're a NFT marketplace. Now they've expanded on that. They've added some new functionalities. They have a token that's getting ready to launch. I'm not sure what the debut date is on that, or if they have one in place. But they're now offering ways for you to earn rewards. Is that right?
Yeah, so kind of going back, right? OpenSea was the essentially like the largest NFT trading platform. And they never launched a token, right? So everyone on some level expected that to happen, but then it got overtaken by Blur in terms of volume a few years ago, and they've kind of gone silent. OpenSea kind of went silent for a couple of years. Really didn't improve the product too much. But it seems like they were building in the background, and the OS 2 was in beta for a while, and now is officially launched, and it looks completely different. I don't know if you can pull up the OpenSea site, but now it's not just an NFT marketplace; it is a token trading um, application. It has full token trading across 19 chains, um, and it's just you can mint NFTs, you can swap tokens, you can buy meme coins, all from this single interface. Yeah, and like I said, it looks just like a completely different website. And yes, they've introduced voyages, essentially a point system where you can earn points by completing actions such as swaps and mints and buying new collections. So I think now everyone knows that the C token is coming out, and this Voyages points campaign is the precursor to that. And they also have been uh, were subject to a lawsuit from the SEC. So I thinking, maybe that was a thing that kind of held them back in terms of, not only launching the token, but building out all this kind of new infrastructure and new products. So just another example of like the change in administration and change in the regulatory strategy of the administration and loosening those regs. I think is allowing companies to maybe accelerate some of the things that they had planned to do in the past, but weren't able to because of the harsh regulations.
I mean, I don't know. What do you think? Like, are NFTs, are they dead? Are they still here? Are they going to make a comeback? What are your thoughts on that, Mike?
uh, I think so, right? I think and hope so. um I think
Are you
we've talked
speaking as
about.
somebody that owns a collection?
Yeah, I got a few. But I don't. I think it's just like anything else. It's like they've got to change a little bit more. They've got to have a little bit more utility. I think. You've got a lot of projects like Pudgy Penguins that had a super strong community, strong enough to launch their own chain, right? To launch abstract chain, and it I think that that's kind of the core of it. It's like, do you have, are some of those OG NFT communities going to come back? Is it going to come back to the level of 2021 to, where just volumes and prices were through the roof? I don't know about that, but, I still think that the core of this provenance and ownership of creative works, that fundamental premise is still there, and how that extends to digital art, I think is it's a it's a powerful concept. And I would love to see NFTs come back. I love it, and I think they will.
Maybe once we get into a different part of the cycle, it will make a comeback. But you mentioned a word that really stuck with me, Mike. You mentioned utility. And that brings me to this next article. I mean, talk about an amazing use of utility here. New Jersey's Bergen County to tokenize 240 billion in real estate deeds on Avalanche network. This obviously isn't like the whole like token go up, but just the fact that
Yeah.
we're talking about a real use case here.
Yep.
Everybody knows that blockchain is considered to be a public ledger, and now we're making really good use case out of it.
That's right. That's right. And I love that, right? Like, I think we've got a lot of kind of balanced takes here on how crypto, should be adopted, and like what, we talk a lot about meme coins and whether they're good for crypto and all that kind of stuff, right? But like, this is true real world use case. And this isn't the hugest story in the world, but like, personally, I live in New Jersey right now, outside of New York City, right? I would love to see my property deeds, my car ownership, deeds like on blockchain. So Bergen County, they plan to digitize almost 400,000 property deeds worth 240 billion of real estate on Avalanche, like you mentioned. And this is just the core of like what the blockchain can provide, just these benefits, right? You're talking about immutability, and you can update the metadata. You just have the data that is secure. That you can show the provenance of it. And also, it's just, it's simplified, right? Like, you don't have to dig. You can look at it on the ledger. You don't have to dig in some antiquated database system that I'm sure that the Bergen County government probably uses right now. And now, Balcony is the company that, I guess, is a consulting firm that Bergen County is working with on the implementation. They've introduced similar systems in several counties across New Jersey, and they claim that the blockchain based platform can cut deed processing time by 90%, while addressing risks like fraud and record discrepancies. So, like, it's just kind of just coming to life the benefits of blockchain and this perfect use case. And I want to say that, like, I've got a bunch of buddies who grew up in New Jersey, some of my best friends, and we all grew up together, and a lot of them are, they're not into crypto, right? And they say, it's speculation, all these tokens, right? And I sent them this link, and a couple of them are still like, so what, is Bergen County launching a token? I'm like, no. I'm like, they're like, where's the crypto aspect? I was like, it's on the blockchain. Like, so, and I'm describing to them, the AVAX token secures the Avalanche blockchain. That's where all the data is stored. Decentralization. It's run on a bunch of nodes, right? And there's still a kind of lack of understanding how blockchain works. So, to a lot of people who say that we're not early anymore, I still think that we are early. I still think there are a lot of people out there that don't fully understand how the blockchain works, how all the components work together to bring you the benefits of immutability, of transparency, and decentralization. So I still think I love use cases like this, and I think it's just with my experience of sharing this with my buddies who are not into crypto, it still really tells me that okay, maybe we're not early in the sense of like Bitcoin, but like in terms of the actual adoption of these technologies for the uses and the benefits that they were intended to, uh, we are definitely still early.
Yeah, I think that these stories are just as important as the ones where we read about Bitcoin going up or, Ethereum. Like, yeah, everyone's excited if your bag it pumps. But these stories are just as important because it forces people to be educated. And
Yeah.
and let's not forget that last year, California's Department of Motor
Yes.
Vehicles digitized 42 million car titles on Avalanche as well. So for whatever
Yep.
reason, maybe their business development team is just so amazing. I mean, I know some of them, they are great, but something about Avalanche, they're finding a interesting use case here with Avalanche. So something to keep
Yeah.
an eye on.
Yeah. They've done well on the institutional side. It's another point that we talk about a lot is just how this open permissionless technology is built. There's so much good that comes out of it, but because it's open, because it's permissionless, anyone can use it in the way they want to use it. And a lot of times that is, for money laundering, for scams and rug pulls, right? And like all of that kind of overshadows all the good applications and all the good products that are being built. And yeah, and that's kind of a constant battle that we have to fight. But it's stories like these, it's real institutions and governments, and down to general retail users using the products that are being built, and that's kind of the end game that we're all working towards.
Mike, let's talk about some of the startups that are securing some major funding. And this gives us insight into what we can expect in terms of narratives. Sometimes these set the standard, so to speak. Norris Protocol, what are these guys up to?
Yeah, so this is pretty relevant in terms of timing. So Naoris Protocol is a decentralized post-quantum cybersecurity infrastructure. They raised 3 million in a strategic round led by Mason Labs with participation from Tradecraft Capital, Level One Robotics, and others. So this whole post quantum infrastructure, look, I can't begin to tell you exactly how it is, how it works against quantum, but like their mission is to protect the global digital infra from existing and emerging quantum computing threats with its sub-zero blockchain and proof of security consensus. So look, this is pretty timely, right? We're talking, there have been a lot of stories about the developments in quantum and how they can impact Bitcoin's SHA-256 cryptography, and all the other cryptography of the blockchains, right? So late last year, Google announced their Willow quantum chip. Microsoft, they they kind of like invented a new material for their quantum chip, Majorana, I think it's called. And BlackRock recently published a piece on quantum's threat to crypto. So we know that quantum is something that can be a major threat to the cryptography of all these crypto protocols. I think there's a little bit of a debate on how soon that can happen, and I think we'll see how Naoris can help potentially protect. But I think we need to start really preparing now, right? And I know with Bitcoin, with the Bitcoin core devs, there are some conversations happening on how you would deal with this. Would there need to be a hard fork? and just kind of porting over for some of the very old wallets, and so it's definitely a conversation that's happening now. Yeah, we're still not quite sure on what that timeline looks like, but if quantum keeps developing at the pace that it is now, like now is a very, very good time to be talking about how to deal with that.
It's a mixed bag of people's views on this topic. Some people are concerned. There's a reason why these people are getting money to continue to develop these solutions. On the other hand, there are people that are saying, look, if Bitcoin can get cracked, we probably have a much bigger issue on our hands. They can probably crack the entire infrastructure of the United States, and we're looking at, World War III. And at that point, securing your Bitcoin may be the least of your problems. I don't know. I don't think we should be ignorant to any possibilities. I think we should definitely explore that, but it's not so cut and dry yet. So, for anybody out there that's panicking, there's no need to panic just yet. But it's good to know that there's a finger on the pulse there, just to kind of see what's happening on that front. Let's stick with the Bitcoin theme and talk about
Yep.
Asigna.
Yep. So Exigna is the Bitcoin multi-sig platform. They raised 3 million in a seed round led by Hivemine and Tyke Ventures, with participation from Portal Ventures, Sats Ventures, Trust Machines, and Bitcoin Frontier Fund. Really household names in the Bitcoin ecosystem. So there's a non-custodial smart multi-sig, essentially the Gnosis safe of Bitcoin, and they enable teams, DAOs, and institutions to manage their shared Bitcoin treasuries and interact directly with Bitcoin DeFi. So Gnosis Safe is used by so many teams, basically every kind of operating DAO or team in the Ethereum ecosystem. Um, and Asigna seems to be on the path to kind of be that for the Bitcoin ecosystem. And it's kind of like in lockstep with just the development of overall Bitcoin ecosystem, where now uh, you're talking about entities that are operating day to day, building with different types of currencies in the Bitcoin ecosystem that you need to manage, whether that's Bitcoin or whether that's these tokens of L2s and DeFi protocols. So you need a good kind of central. I don't want to say centralized, but like it's a central wallet to use within your team to make sure your funds are secured. So again, very much in terms of like how Gnosis Safe is so core to Ethereum teams building on Ethereum. Asigna seems to be a front runner for that similar platform for operating teams in the Bitcoin ecosystem.
And there were a lot of conversations at the Bitcoin conference about who's going to custody your assets, who's going to custody your Bitcoin. And a lot of the exploits that we see, Mike, yes, many of them happen on the smart contract level, but there's also a lot that happen just from a pure OPSEC standpoint. So
Yeah.
having solutions like these that are secure, user friendly, are going to be really important for teams to be able to manage their treasury. So
Yeah, and that's the thing. I think that for the most part, the technology and the smart contracts have been pretty good, right? And you can talk more to this, being in the security space than I can. But yeah, that whole social engineering part of it is just always going to be a threat, right? The human element is always going to be a threat there. So, but the least we can do is get the technology side of things up to tip top shape.
last but not least, Mike, Donut.
Yeah, so Donut is an AI powered crypto browser, and they raised 7 million in a pre-seed, led by Bitcraft, HackVC, and Hongshan, which I believe is ex Sequoia China, with participation from a couple of other VCs. And so Donut is a agentic crypto browser. It's built on Solana and has a browser that integrates a native crypto wallet and access to dexes that enables users and AI agents to autonomously execute trades and other on-chain transactions like yield farming, portfolio optimization. directly from the browser. I've been having some conversations about this and I posted a couple times to Twitter and LinkedIn about how we're so used to wallets being the gateway into crypto. MetaMask has been around forever, Phantom and for Solana, Kepler for Cosmos, and many others with their kind of each blockchain kind of has their native wallet. But I think like browsers are going to be a super important gateway into the future, especially as we make some advances with account abstraction, chain abstraction, just better UX. Like Brave, I use Brave, and they were really one of the first that went after this space, right, in crypto, where you've got the browser and you can get onboarded because you can get paid in the BAT token to view ads, essentially, right? And then they have an embedded wallet. Like they kind of shifted more to like security and privacy, which is obviously extremely important, but people use Brave now. But like there's this opportunity for desktop browsers, mobile browsers, especially with like the AI that Donut provides to with account abstraction, with chain abstraction, to really have the browser be that primary gateway into into crypto, because you can do a lot of discoverability. You can everyone uses the browser every day. Not everyone uses their wallets every day, at least the crypto wallet. So I think there's a massive opportunity, and we're kind of seeing this play out a little bit with this fundraise.
And I think that all of this is done with the goal and mindset of increasing the user experience. And so we're seeing a lot of progress from, say 4 years ago to where we are now. If you think about where we were 4 years ago, we were obviously this was not a thing, at least not that I recall. And then secondly, the AI aspect of even just providing instructions on what kind of trade you want to execute, that wasn't really a thing either
Yeah.
last cycle.
Yep.
So we're seeing this, and this is why I love hopping on these episodes with you, Mike, because we see the improvement in the technology in real time, right? And that way, our viewers that are watching this, they can be educated as well. So for those that are watching, if you found this video helpful, please subscribe to the channel, like the video, give Mike a follow. He's got a killer newsletter that he comes out with called the Deep Ventures Newsletter. And we'll catch you guys in the next one.